Good evening, Ken Long with the Daily Market Commentary from Tortoise Capital. It's the evening of September 1st, 2009. Today we saw the third day in a row of selling. We're still in bull territory. In fact, today we move into bull normal from bull quiet, where we've been for about 6 weeks. And so what we can see here is that the tension was resolved with selling today, that we're back down into the blue box. We came through the 20-day moving average and resting at right at 100. Next visible signs of support are at 98, then at 96. A little more than 96 is the 50-day moving average. That would, I think, be the signal for a retest of the 200-day moving average and some real panic selling. So what we saw today was the first day of what could be an interesting roller coaster ride here. So we see volatility has moved up sharply. ADX has rolled over from that previous high of north of 35, is now down to 33.86. And you can see how the plus DI and minus DI are converging. We've left the overbought conditions and are now very close to oversold, which would normally be a buy signal in our ETF channeling. And as we'll see in a minute, that many of those global ETFs have signaled a buy on the channeling system. So that's a quick look at the market health check. Here's the daily. We're going to take a look and see. Yes, we're actually, today we will have entered bull normal. Doesn't show on that chart, but bull normal is where we are now. We'll confirm that tomorrow. Annually, we're at the 58, 10-day at the 32. We've now moved into oversold conditions on SPY. You can see the leading candidates for the 10-day max pain, dominated by material companies. Continued weakness in Latin America, with Brazil, Mexico, and the Latin America mega cap 40s leading the way. We see ILF has fired in the overreaction system. That's the second signal. And in the channeling system, SPY, the NASDAQ, U.S. mid-caps and small caps, ILF, and emerging markets have all fired. You can see that for the first time we've actually entered normal conditions, bull normal. The slope of the 30-day regression line has continued to decline. You can see here the slope of that line. The selling from 2 weeks ago and from the last 3 days has continued to make that degrade. We've crossed the red line on volatility. We're now starting to inch up. That's a bad sign normally for stock market returns going forward. You can see ADX has declined, and the convergence of plus DI and minus DI, and the difference between them being so low. 30-day, 60-day stealth remains the usual suspects like Merck and Walmart, which today were stronger than SPY. And the 5-day down in each one of these has now become 6 days down. Highlighted in green from Bank of America, GE, Caterpillar, Alcoa, IBM, Coke, Johnson & Johnson, Home Depot, Walmart, and DuPont are all at 20 or less on the 10-day index, meaning that they are all officially in oversold conditions. On the daily tactical, see in the Dow, the winners today were Coke, Walmart, and United Technologies, with only Walmart being positive on the day. Let's see, the 10-day max pain candidates, Bank of America, GE, Alcoa. Alcoa broke through sharply its support level at 12, and so now that trading range from 12 to 14 is suspect. We have to look at 12 now as a profit target, as a source of resistance for the trades in the next channel. We can see these top four that are oversold on a 10-day index includes Caterpillar as well. Inside the ETFs, we can see the gold, silver, and treasuries were definitely in favor today in a flight to quality and escaping from equities. And pain came out of the financials, real estate, and natural gas. I would look for more weakness in both of those sectors, in the financials and the real estate again tomorrow. If we see weakness in SPY in the market and weakness in XLF, the financials, we'd want to target SKF as the double inverse financial ETF, which would then do very, very well. So that's a quick look at the daily tactical report, and that concludes the market health check for September 1st, 2009. Keep your powder dry and your risk managed.